A fragile United States and Iran ceasefire sparks a massive Wall Street relief rally. Welcome. This is Daily Market in 3 minutes. Let's dive in Wall Street. The S&P 500 jumped 166 points to close near 6,800. The Nasdaq Composite exploded higher by 617 points to finish around 22,600. The Dow Jones Industrial Average surged 1325 points to end near 47900. The Magnificent Seven largely soared today. Meta climbed 6%, Amazon jumped 5%, Alphabet added 4%, and Nvidia rose 2%. Apple and Tesla gained roughly 1% each. Microsoft slipped fractionally by the closing bell. Winning sectors included consumer discretionary, industrials, and information technology, leading the broader market higher. The energy sector was the sole loser today, plunging nearly 4% as the geopolitical premium evaporated. Bitcoin hovered near $72,000. Gold fell 1% to $4,730 an ounce as safe haven demand unwound. Silver gained 2% to $75. West Texas Intermediate crude oil suffered a historic collapse, plummeting 16% to roughly $94 a barrel. Today's historic relief rally was directly fueled by a sudden 14-day ceasefire agreement between the United States and Iran. This temporary truce explicitly requires the reopening of the Strait of Hormuz. The unwinding of this geopolitical fear trade caused crude oil to crash by 16%, severely dragging the energy sector down. Meanwhile, the vanishing war premium sent cyclical and growth stocks skyrocketing as investors rushed to close short positions. In corporate news, Meta Platforms secured a $21 billion agreement with CoreWeave for artificial intelligence cloud capacity through 2032. Alphabet also expanded its processor partnership with Intel. This intense demand for artificial intelligence infrastructure drove the massive outperformance of mega-cap tech stocks today. Amazon shares jumped higher after announcing its pharmacy unit will stock Eli Lilly's new weight loss pill at physical kiosks with same-day delivery. This healthcare expansion successfully bypassed traditional cold chain logistics and brought strong buying volume. The 10-year Treasury yield fell to 4.29%. The 10 to 2-year yield spread widened to 31 basis points. The US dollar index erased its year-to-date gains to hit 98.8. The VIX Volatility Index fell 7% to 19.5. The unwinding of the energy inflation premium drove yields and the dollar lower, creating a textbook risk-on environment. Despite the surging market, the CNN Fear and Greed Index registered a score of 32, keeping it firmly in the fear zone. This implies the rally was largely driven by institutional short covering rather than genuine optimism, keeping smart money highly cautious heading into the weekend. Looking ahead, the market outlook remains heavily dependent on developments in the Middle East. We are in a fragile transition phase. Unless oil tankers physically resume safe transit through the Strait of Hormuz, investors should expect a choppy recovery rather than a vertical bull run. Tomorrow, the March Consumer Price Index report will be released. Next Monday, Goldman Sachs kicks off bank earnings, and existing home sales data will drop. Next Tuesday brings the March Producer Price Index report. As always, this video is for informational purposes only and is not financial advice. Please like and subscribe for more. See you next time.